I paid more in taxes last year than some of the wealthiest people on Earth. And the crazy part? Everything they did to avoid it was perfectly legal. How? Well, they use this secret three-step playbook that basically hacks the entire tax system. And today, I'm opening up that playbook and showing you every single page. Look at this number. Just stare at it for a second. That's not a typo. According to a massive investigation by ProPublica, that is the actual amount of federal income tax Jeff Bezos paid in 2007 and 2011. And Elon Musk in 2018? Yep, same thing. A big, round, fat zero. And if seeing that makes your blood boil just a little bit, you are definitely not alone. This person on Reddit just hits the nail on the head. It really feels like there are two completely different systems, right? For most of us, our paycheck gets a tax haircut before we even see it. But for the super rich, they're not even in the same building. They're playing a totally different game. So, yeah, that's the big question, isn't it? How on earth is this legal? We're not talking about some shady offshore account stuff. This is a strategy that's so powerful, so baked into the system, that it's basically a cheat code for money. And we are about to learn the code. It all boils down to this three-step playbook. And I need you to just, for a second, forget everything you think you know about taxes. Seriously, we're not talking about W-2s and deductions anymore. This is a whole different universe that runs on wealth, not income. And here it is, the whole thing. Buy, borrow, die. I know, it sounds like a tagline for a terrible action movie, right? But these three simple steps are the engine that lets billionaires legally wipe their tax bills off the map. So let's break down exactly how this engine works, starting with step one. Okay, so step one, buy. This part's actually pretty straightforward. It's something a lot of us do on a smaller scale, maybe with a 401k or buying a house. You just buy assets, stuff you think is going to be worth more later. So this could be stocks, it could be real estate, maybe a ridiculously expensive piece of art, or a bottle of wine that costs more than my car. The main thing is that its value goes up. This is how fortunes are built. But here's the first little secret. As long as they just hold on to that asset and don't sell it, all that growth is what's called an unrealized gain. And the government can't tax you on money you haven't technically cashed in yet. It's just profit on paper. And right when you were thinking, okay, I get it, you run face first into this. I mean, just try to read that sentence. It's from a 300-page IRS guide on something called cost segregation. If your brain just did a backflip, that's kind of the point. The idea is simple, but the tax code around it is this insane labyrinth designed by an army of lawyers. This slide just says it all, doesn't it? Over here, you've got the simple little form that most of us deal with. And on the other side, that's just one of the instruction manuals for the rich. This complexity, it is not an accident. For us, it's a massive headache, but for billionaires, it's a playground. And they have teams of the smartest people on the planet finding every single loophole. Which brings us to step two. And honestly, this is the absolute genius move of the whole strategy. Borrow. Okay, so you've got $1 billion in stock, but you need some walking around money for, I don't know, a new private jet. Do you sell your stock and pay a ton of taxes? No way. You go to a bank and take out a loan against it. Why? Because the IRS doesn't see a loan as income. It's just debt. And debt is 100% tax-free. This table right here is the whole secret. Look, selling your assets creates a taxable event. You get cash, sure, but Uncle Sam shows up to take his cut. But borrowing against your assets, you get the cash, you pay zero tax, and you still own the original asset while it keeps growing in value. It's not just having your cake and eating it too, it's getting a tax-free loan to buy a second, even bigger cake. This guy, Professor Edward McCaffrey, he's the one who actually came up with the name Buy, Borrow, Die. He boiled it down perfectly. He said, the government does not tax two things, wealth you haven't sold yet and debt. This whole strategy is built on smashing those two giant loopholes together. And this isn't just some theory from a textbook. Look at this number. That's a 1.2 times billion-dollar loan that investor Carl Icahn had out, according to ProPublica. He used the interest payments on gigantic loans just like this to create massive deductions, which let him report a tax loss and pay zero federal income tax for 2 years in a row. And that brings us to the final and frankly most unbelievable part of this entire plan, die. I know, it sounds super dark, but for tax purposes, this is the ultimate getaway car. It's how all this untaxed wealth gets passed on basically forever. So the magic trick here is this loophole called the stepped-up basis. Just think of it like a video game. Let's say you bought a stock for $1 and you leveled it up all the way to $1 billion. That's a massive capital gain you should pay taxes on. But when you die and you hand the controller to your kid, the IRS basically just resets the game. They pretend your kid just started and bought that stock today for $1 billion. So all that growth, from $1 all the way to $1 billion, poof. As far as the tax man is concerned, it never even happened. Your kid can turn around and sell that stock the very next day for $1 billion and pay exactly zero in capital gains tax. The entire tax bill just evaporates. And the whole cycle can start right over again. So when you actually step back and look at the whole picture, it becomes so clear. It's not just about different tax brackets. We are living in two completely different tax systems. There's one for people who work for their money, and then there's this secret one for people whose money works for them. And don't think for a second this is some new thing. This loophole has been around for over 100 years. Right after the income tax was even created, a single Supreme Court decision back in 1920 basically said, hey, if you don't sell it, it's not really income. And that one ruling created the crack in the foundation that this entire billion-dollar strategy is built on. This slide right here, this is the entire explainer in one simple picture. For most of us, it's a one-way street. You earn income, you pay tax on it, and you live on whatever's left. But for the asset owner, it's a golden loop. Your assets grow, you borrow against them tax-free to live an incredible life, and the whole cycle just keeps feeding itself, forever. Which, leaves us with the billion-dollar question. When you see a system with two completely different sets of rules, built on a foundation that's a century old, you really have to wonder, is this a bug in the system, or is it a feature?